So Akamai is actually, this company has been around since the 90s. And if you look at the long-term stock chart of this company, this was one of the companies that was the kind of the poster children for the dot-com bubble, with the stock price going through the roof. And even today, with what is I guess almost 25 years later, we're still nowhere close to the numbers that were there. But this company is has been, as I mentioned, has been around since the 90s. And is the best known for one of the first and the best content delivery networks, establishing content delivery networks that help get the content, the internet content, from central locations, either from when we're talking about company like video companies like Netflix or YouTube, where this video is more often than not in one or two locations around the world. But in order or for video gaming companies, in order for this content to get to the final user, what's quite often used as a content delivery network, which is a network of servers and locations around the world that bring this particular piece of information or this particular piece of data close to the end user, and which reduces the latency in terms of the communication between the end user and when they get the data, either coming in or coming out to the whatever mode of communication that they're using. So Akamai has developed this network and has been maintaining this network, global network of over 4,000 points around the world. They have super important. They have relationships with ISP partners around the world, over 1,000 different partners, and this is in hundreds of more countries globally. The market cap of the company is $12.2 billion, and in 2024 they delivered almost $3.8 billion of revenue, $1.3 billion of EBITDA, and over $800 million of free cash flow, which means that the company is trading at about 6% free cash flow. So this company, while it was dominant in the 90s and has developed this excellent business, unfortunately, since the 90s, the content delivery network, while the amount of data has exploded exponentially, the way that the content delivery networks work, that has changed, and which has turned Akamai, this core business of the delivery business, has turned it into the content delivery network, has turned it into what is essentially a business with a declining revenue profile. And the reason for why that happened is because some of their largest customers have become large enough to incorporate a portion of their content delivery network needs into their own networks. So they have built up their own CDNs that take up a portion of this the data that's going through. And also you have competitions develop. So this has become while once again, the amount of data globally is increasing exponentially, this business in terms of the revenues that it generates for Akamai has been declining, even though it still remains extremely profitable, which would kind of make it sound like the first type of business that I said that we shouldn't be touching, which would be declining demand profile. But what makes Akamai very different is what they have done with the money that they've been generating from CDNs over the years. And one of the first things that they have done, which is more than 10 years ago, is they started investing into a cybersecurity business. And the way that they've been building cybersecurity business is by buying a specific technology, a company with specific technology that's very well positioned within a small niche, that is complementary to the Akamai's core business of content, and that could utilize Akamai's core business of content delivery network in a number of servers around the world, and most importantly, could be cross-sold to the customers, the large corporate customers, enterprise customers that Akamai has. So in the cases of the Netflixes of the world and other large companies that have incorporated a portion of their CDN needs internally and doing it themselves, they still retain the relationship with Akamai because Akamai still provides service for them for some of the kind of harder to reach locations, or some of the locations where it doesn't necessarily make sense for these customers to have their own networks. So Akamai has retained relationships with these enterprise customers around the world. And they're using these relationships in order to cross-sell other businesses to them, including, as I've already mentioned, cybersecurity, which they started building from acquisitions about a decade ago. And through those acquisitions, they first added things that are complementary, things like the protection against the DDoS attacks, then authentication. So a lot of the things that, from a cybersecurity perspective, that kind of need to happen on the edge in order to protect the network. It does make sense to for Akamai to speak to their customers, to their delivery customers about these businesses, these services as well. And that has been a highly successful strategy. Akamai over the years has spent about $2 billion on acquiring a number of different security businesses. But as a result of these acquisitions, they have been able to cross-sell and build a delivery business that in last year had delivered over $2 billion of revenue. And now the security business is now larger than the delivery business. That delivery business 5 years ago used to represent about 2/3 of Akamai's revenues. Now it's just 10%. And part of the reason for why that is because the securities has grown to be a major portion of Akamai's revenues. Historically, it has been growing at 20% plus. The growth rate has slowed down a little bit in recent years, and now we're talking about 10%, in part because they have been so successful at cross-selling or some of the services in the past. But they have a couple of more recent acquisitions in spaces like API security, where the cross-sell process is just starting. And once again, you can see the companies that they have acquired in the space, like Guardicore or No Name Security, where they acquired them, but and able to significantly increase the revenues from these businesses very fast in a similar ways that they have done in the past. The other thing that Akamai has done is, and this is a little more recently, is that they wanted to add a third, what I would call a third leg of the stool. And they added a compute business that once again is built with the idea of how can we utilize this global network of servers? How can we use it? How we can utilize to help our customers? And when the compute business, and this is kind of going back in history a little bit, when I started looking at Akamai, which was back in 2016, we didn't invest into it back then, but we did start looking at it to try to understand the company. And part of the reason for it became interesting is because you had that negative inflection point in the delivery business where that business started falling. So we wanted to understand what else is going on and spoke to some of their customers, including some of the largest gaming companies that use Akamai services. And the interesting comment from one of the people that I spoke to was that while they're very happy to use Akamai's delivery service, what they would love to see is they would love to see Akamai to add the compute component as well. And compute that specifically happens on the edge, because for gaming companies, for example, it would be super useful to have it because it helps calculate, for example, the gaming leaderboards. That calculation has to happen super fast, and that does make sense for it to happen on the edge. So customers like that were saying that it would have been very helpful for Akamai to have that component as well. So we can not just do what can deliver the content to them, but also be able to compute, to have certain compute functions on the edge, because that would be very helpful to us. And this is exactly what Akamai has done in 21 through acquisition of a company called Linode, which is a kind of a edge compute company. And the way that we can think about this edge compute is like there's the massive clouds like AWS or Google clouds of the world. So Akamai does not compete with them for the large workloads, but there are certain workloads that should and are happening on the edge. I already mentioned the calculation of gaming video board calculations. There's also some of the data has to stay local in particular countries, especially if it has to do with healthcare data or in some cases finance-related data. So some of the use cases for cloud compute need to happen on the edge. We're talking about the total cloud compute market is absolutely massive. We're talking about hundreds of billions of dollars. But even if Akamai participates in a single-digit percentage of that market, But even within that, that's a business that could be big enough and significant enough for Akamai to compete where it would make a difference for them to invest. So Akamai bought Linode for $900 million back in 2021. After that, their compute since that acquisition, their compute revenues have more than doubled in last year. Delivering over 600 million of revenues, and that's a business that is expected to grow at 15-20% per year, and maybe even higher depending on what happens from here. So this has been another kind of idea of something that we can cross-sell to the existing customer base, something that we can and can do so profitably. Within the compute, this is not something that we were thinking about when we invested into the company, but something that is becoming more relevant is the idea of kind of artificial intelligence, and specifically inference. And inference is something that, so we're not talking about use of our servers and artificial intelligence for developing the large language models, the kind of the ChatGPTs of the world, but really more of a kind of using that information to come up with answers, to take an information that has been learned over the years, to think about the problems. And this is one use case where I think, and what seems to be happening is that Akamai's network of edge servers could become extremely relevant, because this is the information that it does make sense for this information to be processed quickly, and the closer it is to the end user, the better.